Second last video, let's get to it. Okay, so we're going to be looking at E1310. This question is on the statement of retained earnings, which is something that tripped us up while we were doing this. You know, we were messing up all the formatting. It wasn't really conceptual error, but I feel like this is something that's very forgettable. So we're just going to be going through it in this video so you can refer back to it. So let's get into it. So most of this, like basically everything, I'm pretty sure is given by the question. So there's not going to be too much side calculations or anything like that. So it's going to be a pretty quick video. So the first thing we need to do to calculate is to calculate net income. So that's just revenue minus expenses. And the revenue given in the question was 529,000. Okay, and then the expenses given in the question was 444,500. Okay, and then this results in our net income before taxes, Okay, and in the question it says that we are being taxed at a 15% rate. So we can just write income tax, and then to calculate our rate, we'll just take 15% of our net income, and then subtract after I write net income after taxes. Yeah, perfect. Now we can just subtract these two values, resulting in 71,000 of net income after taxes. Okay, so now that we have our net income, we're all set up to do our statement of retained earnings. Okay, and whenever you're doing one of these, you always start with the company name, which is Didsbury Digital Ltd. Okay, and that's not a typo, that's actually how it's spelled in the textbook. And then whenever you're doing one of these questions and you have to prepare a statement, the middle line is always the statement name. So first one is statement of retained earnings. I always like to think about it like who, as in like who's the person we're doing the statement for. I'll write that down actually. I think that's good to know. Who, what is the statement, and then when. And we'll just fill in the time, which was given also in the question, for the year ended September 30th, 2014. Okay, so the first thing whenever you do the statement of retained earnings is establishing what it was on the first day of the period. So retained earnings, October 1st, 2013. And I believe we need a comma here before the date. Okay. 37500. Okay, so the reason I have this stuff in purple is because this stuff all swaps around, depending on the question, but all this stuff on the statement in black, this will be the same no matter what type of question you do. These are like the kind of base components of the statement. Okay, and then we add net income after taxes, which we can just copy and paste from our previous calculations. Okay, and then we do less dividends declared. Perfect. The dividends declared, the reason we're doing dividends declared instead of dividends payable is because these are dividends declared for the next year. Like they're still kind of outstanding. So that's why we're not doing the dividends payable account. And then for that we got 40,000. Okay. And now that we've established that we're adding more than we're lessing, we can do an increase in retained earnings. If it was the other way around, we would do a decrease in retained earnings. So that this is the amount of our increase. We can just sum these up to get our retained earnings for the last day of the period, which is September 30th, 2014. Okay, cool. That basically sums up this question. Everything is basically covered here. There might be a few differences depending on the difficulty of the question, but this is the key core foundation that you need to know if you want to go into a question like this. And yeah, that sums up the video. Thank you for watching. Have a great rest of your day. Hopefully this made sense. And yeah,